Have you ever wondered how international trade dynamics can ripple through the multifamily real estate market? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. The Canadian multifamily housing market is currently facing some significant challenges, as highlighted in a recent report by Oxford Economics. This comes as no surprise given the current climate, where a mix of new housing supply and international trade disputes are creating a complex landscape for investors and developers alike. According to the report, Canada's average national asking rent was $2,129 per month in May, representing a 3.3% decrease from the same month last year. This trend is particularly pronounced in major cities like Calgary, Vancouver, and Toronto, where apartment rents have seen the most significant declines. The report attributes part of this downward pressure to the completion of new multifamily units, which jumped by 35% in 2024. This surge in supply is expected to persist as more purpose-built rental units come online. While this might seem like a challenge, it also presents an opportunity for those looking to enter the market or expand their portfolios, especially as these new units get absorbed into the housing stock. On the demand side, factors like slower immigration and fewer temporary residents are curbing the need for rentals. However, the ongoing trade war with the United States has also introduced new economic pressures. The threat of escalating tariffs from the U.S. has placed additional strain on the Canadian economy, which is already grappling with recessionary conditions. This in turn affects the real estate market, but there's a silver lining. As homeownership becomes less affordable, rental demand is likely to remain stable, providing a buffer against more significant downturns. In a move to alleviate some of these pressures, Canadian Prime Minister Mark Carney's government has agreed to resume negotiations with the United States. This comes after President Donald Trump threatened to escalate the trade war over tariffs unless Canada rescinded its digital service tax. While an agreement has yet to be finalized, the willingness to negotiate is a positive step forward, indicating potential relief for the market in the near future. Looking ahead, experts like Tony Stillo, Director of Canadian Economics at Oxford Economics, caution that unless a deal is reached to remove most U.S.-Canada tariffs, the housing slump could persist through the end of 2025. Stillo notes that poor affordability, weak consumer confidence, and job losses from the recession will likely continue to impact demand. Moreover, a shrinking population due to immigration cuts might further exacerbate the situation, pushing up the supply of homes for sale and causing average prices to fall by 8% to 10% by the year's end. CoStar Market Analytics provides some additional insights, noting that market vacancy rates in urban centers like Toronto and Vancouver are approaching more balanced levels. While Alberta is seeing vacancy rates climb to cyclical highs, this rebalancing could mean more opportunities for savvy investors to capitalize on these market shifts. Despite these challenges, it's important to remain optimistic. As the multifamily housing market continues to evolve, those who can navigate these complexities will find opportunities to grow and thrive. Stay tuned as we continue to explore these developments in future episodes. Now, shifting our focus to some exciting developments in the multifamily housing sector, we head over to Buckeye, Arizona. According to a recent article by Haley Mensick from the Phoenix Business Journal, the Ward Real Estate and Development Company is proposing a significant project that could transform the landscape of this growing area. The proposal includes a mix of nearly 1,000 housing units, featuring cottages, duplexes, and garden-style apartments. This development is planned on vacant land situated north of Interstate 10. It's an ambitious project that aims to bring much-needed housing to a region that remains sparsely developed. This initiative is a testament to the growing demand for diverse housing options in areas like Buckeye, which are seeing increased interest due to their potential for expansion and development. As more people look for affordable living options outside of major urban centers, projects like these become crucial in meeting housing needs. While this development is not in Canada, it's indicative of a broader trend we're seeing in the multifamily real estate sector. Developers are increasingly looking to untapped areas with the potential for growth, which can lead to significant opportunities for investors willing to explore these new markets. It's always encouraging to see such proactive steps being taken to address housing shortages, and it provides a glimpse into possible strategies that could be applied in similar contexts within Canada. As we continue to monitor these developments, there's much to learn from how other regions are tackling similar challenges. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.